If you've just tuned in, welcome to the FOMC live report with Jerome Powell. We will be reporting on it very, very shortly. So stick with us. Big afternoon in store. Please share the video, smash the like, come into the live chat, get yourself into the hot seat. And we have live Jerome Powell from our show this afternoon. It's all happening. Sit back and relax. You won't miss anything. It's all going to be here live for you. A big event coming up very, very shortly. And today we are joined from guests around the world. So would everybody please welcome our guests in this afternoon. Lots of guests here today. So all my family members, you'll notice that most of our audience has a badge after their name. It means they're a member of our channel. And we have the highest membership to viewer, live viewer ratio on YouTube. More people are members here who watch our live show than any other YouTube channel. So if you scroll up, you'll see that all our family, nearly everyone who watches live here is a member. If you'd like to be part of our main event today, become a member. I'll give you the link in the chat right now. There are many, many perks and benefits designed to help you, support you. It's not for the benefit of our channel, it's here because we're trying to grow the best YouTube channel in supporting people, raising money for charities, always live, always telling you the truth, always sharing our real trades, our real money. There is the invitation to join. If all my members could put their cities and countries in, please. And let our guests know where you're from. That would be absolutely great. If you've just tuned in, you're in the right place. This is the FOMC report. We are going to report it live. See Jerome Powell live here on the show, and you won't miss a thing. Plus the family to discuss before and after. So everything is here for you. If we get a 0.75 basis point hike, then the markets will rally. If we get 0.5, they'll explode upwards, that is. And if we get a 1% rally, they will drop all the way down. We could see 20%, 30% wiped off the markets today. That could happen. That really could happen. That would be very dramatic, but that could happen, especially on crypto. That could happen. But hopefully that won't happen. It's a 1 in 5 chance at the moment that will happen. So let's hope for the best. We have a poll at the top of the screen. Thank you very much indeed, Fausto from Portugal. Our members now are letting you know they're here. Here come the family. Stephen Lubodansky from Florida. Thank you so much indeed. Put your cities and countries in. Dragonfly is here. All family members. That's the guys with the guys and the girls with their badges after their name. 95% of our viewers are members. Please put your cities and countries in. The members get lots of perks and benefits. Birthday celebrations, replies to all their comments, featured in the chat, fundraisers, access to Discord, many, many perks and benefits. Coming up very shortly. Don't forget to smash the like button and share this video. Click the share button. We'll be here live for the FOMC report. If you've just tuned in, welcome, welcome, welcome. Thank you, Ivan. Some news there about Sweden now in the EU. I think you mean NATO, but we in the EU have officially higher inflation. Yep, Sweden was surprised yesterday, but we in the EU have officially higher inflation. Oh, you're talking about inflation. Sorry, I thought you were talking about NATO. They might get NATO as well, of course. That's another story. I can tell you today that the stocks are rallying for defense stocks. Are rallying due to the war progressing in Russia. You're from Croatia. Wonderful. I visited Croatia before. Love Croatia. I did a cruise ship there as the world piano man, and I entertained in Croatia. Lovely country. Coming up in just 17 minutes, the FOMC live, Jerome Powell. We've got the meeting, we've got the minutes, we've got everything you need to know. Smash the like button while you're here, click the share button, get all your friends in. And we are hoping today for a 0.75% rate hike. Coming up very shortly from 17 minutes from now. Just 15 minutes to go. Dragonfly, you're correct in saying that experts have priced in a 0.75 percentage rate, but that doesn't mean nothing will happen. It means the markets will rally if that is confirmed. We've prepared for that. If that is the case, markets will rally. The Fed might not want the market to rally and scare it and surprise it by a 1% rate hike. That's why we've been scalp trading Virgin Galactic all day, taking profits, reducing debt, margin, all these things that you could be involved with. The markets could rally if we get 0.75, where however, if we get 1%, they will drop. Crypto could go down 20 to 30%. It'd be the biggest rate hike in many, many, many years. It'd be historic if that happens, but that could be what the Fed want to do. So be very wary. Anything is possible today. We're just 14 minutes away before we go live on our show here. If you are new, please come into the live chat. Our members are the ones with the badges. 95% of our viewers are members. They will invite you in to the show, tell you where they're from, and we're here to help and support everyone. If you're over there on Facebook, come and join us here on YouTube, youtube.com/thedaytrader1. What you're seeing on the screen is my real money, my real portfolio, my real balance. We're getting a pump now before the announcement, and that will continue if we get a 0.75 or below. It'll go the other way if it's a 1. If you look on the right side of my chart there, you'll see we had quite a quick pump there for a few moments, and it's selling off really quickly. That is Wall Street. That is the big institutions pumping and dumping very, very quickly to control where the markets are going. So you can see that when it happens that quickly, that's exactly what's happening. Show coming up in 11 minutes time. Smash the like button. We are here for the Fed report with Jerome Powell. Okay, we're just a few minutes ago now before the FOMC report goes live. I'm just talking to my TikTok audience, inviting them and Twitter and Facebook all to join us. You can see the market starting to pump now, getting prepared. What's going to happen? It could be a pump and dump. It's not that long to go now. We're hoping to scalp some more Virgin Galactic. We just got a couple of minutes to go now before I join you live here on YouTube. If you've just come in from around the world, smash the like button. We will be live today with Fed Jerome Powell. You won't miss a thing. You'll see more here than anywhere else, because you can take part, ask questions, get involved. With all my family, please welcome all our guests from around the world. TikTok, I'm just about to go. I'll still keep this stream live. What is your YouTube? The link's in the profile. youtube.com/thedaytrader1. The link is in the profile. Just click the profile up here. Either go to the all links button or go to the YouTube link. The YouTube icon is just there. We got people now subscribing. We're just under 2 minutes, just 2 minutes to go. I've got to go. You don't want to miss this. It's going to be the biggest day on the markets for a very long time. Is my portfolio going to crash? Are we going to see people margin called around the world, lose everything, or are we going to go up? Please don't give up on TikTok. I absolutely not giving up on TikTok. I go live 10 hours a day on TikTok, Monday to Friday. I'm always here. I will stay with you right now. I'm offering you the best experience. If you want to watch this YouTube broadcast where I am now, I'm actually talking to YouTube right now. This is my YouTube channel. Everybody on TikTok, YouTube, get ready. Smash the like button. We're about to have the FOMC live. And we've got our cash giveaway as well. If you want to be in that, just come on and tell me. Okay, TikTokers, I'm now going to get back over to YouTube. Links in the profile. Hopefully you'll come and join me. Okay, here we go. We're seeing Virgin Galactic now start to pump up. It's up 516. The overall markets are moving. I'm up $37,000 right now. And we're getting ready to go. Wow, what a day. Let's get ready. Under your tie. Get settled in. It's about to kick off. One of the biggest days ever on the stock market. All right, let me turn off the music. We are done with the music. There's no more music now. And we are here and ready to go. Thanks for all the subscribers. Puts inbound. We've got people on Facebook watching. Come and join us on youtube.com/thedaytrader1. That's where you want to be if you want to get on the screen, ask questions, call into the show. All right, let's get to it. It's time for action. Here we go. Let's get ready. And are you buckled up? Are you ready to rock and roll? Okay, let's go. Welcome everybody to the Day Trader. My name is Martyn Lucas. I go live every day for the opening and closing bell. It's a big, big day today. One of the biggest days we've had in years. Of course, we're talking about Jerome Powell, the FOMC. We will be there live as soon as Jerome Powell takes the stage. We'll be there live. You won't miss a thing. Here today, everything is... Oh, and the markets are slipping already. Here we go. We're getting all sorts of dramatics. Let me share with you exactly what's happening right now. Here is my portfolio. Look at that. Down 0.3%. One of the most dramatic days today we have ever seen. Down nearly 1% now. Look at that. And it's going to be one hell of a day. Buckle up. Get ready. Hold your seats. You know what you're doing. You've made your decisions already. This could be one of the most dramatic days we've ever seen on the stock market. Where's it going to go? Well, we'll find out very, very soon. You're in the right place. Welcome, everybody. We're scalp trading on Virgin Galactic. We are taking profits wherever we can. Look at the overall portfolio today, down 0.35. That is nothing, remember. The S&P has just dropped 0.16. That is nothing. This is just the beginning. Virgin Galactic. We've just bought a few more. There we go. We're going down again. Here we go. Time to scalp again. If it hits 498, we'll do it again. All right, now, you've just tuned in this afternoon. We've got Jerome Powell waiting in the wings for the Fed report. Here it is. You will not miss anything. We have it all queued up, ready to go. Do not be afraid. You should have already now made your decision of what you're going to do. Do not react to the market. Be proactive. Make your decisions. Prepare. Have you got enough leverage? Have you got enough money on the side? Now then, I want to ask everyone today, if you want the shares to go up today, if you want everyone to make money today, you got to do one thing for me. You got to smash the like button right now. We've got 64 watching and 27 likes. We want 60 likes, and we want to get 60 likes in 1 minute. Here we go. Let's get 60 likes in 1 minute. Come on, let's do it. 60 likes in 1 minute. Smash the like button. We're going to look into our crystal ball right now. Smash the like. Here we go. All right, here we go. We've got 35 likes now. It's coming up. Get ready. Here we go. Look into my crystal ball. Are we going to get 0.75 or are we going to get 1%? We are running a poll right now. Let me know what you think. Smash the like. Are we going to make some money? We've got 36 likes. We need 5. We need 5 more likes at least. Come on, guys. We need 40 likes in the next 18 seconds. Smash the like button. We want the money to go up today. We are seeing Virgin Galactic go down. We are seeing stocks move down. The overall portfolio is moving down. Let's get ready. Okay, the overall situation, we're trying to buy some more Virgin Galactic. That's our high risk position. There you go, we're down 0.28 right now. There's no options trading going on here today. Look at the overall position now, down 1/3%. SPY, Martin, please. SPY, you can look at SPY, it's VU, it's exactly the same. VU and SPY are the same, but I'm happy to show you. If you are a member, Stephen Rowe is. So you want to look at SPY. There we go, there is SPY. It's exactly the same. Exactly the same. It's just a different ETF. There's an error load in the chart. Hang on a minute. There we go. Refresh it again. There it is this week, down 2.64. There's an error. There we go. It's exactly the same. Exactly the same as VU. Exactly the same. All right. There's SPY. There's a big dump, not a pump. There's my VU. Exactly the same. They're doing exactly the same thing. And I'm scalp trading Virgin Galactic, and I'll buy it again at 498. I just sold another 100. You've got to lower your averages and protect yourself. Right, Jerome Powell, we've got this coming up shortly. You've all come to see that. That's what we're going to see. We are going to tap into this live stream very, very shortly. Here is Jerome Powell waiting in the wings, and he'll be speaking live on this show. You have the chance now to ask your questions, get into the poll. If you become a member, you can call in and be live on the show. If you want to call in, you can be live on today's show. Oh my gosh, it's going to be a very, very, very difficult day. This is. Who's ready for it? Look at that now, down another %. The overall portfolio, you can see down nearly 2% now. Now we're falling. Down 2%. Could be the most dramatic day we've ever seen on the stock market. Get ready. If you're over there on TikTok, you need to be on YouTube. Click the profile link up here. Come and join us. That's where our serious traders and investors are on YouTube. YouTube.com/thedaytrader1. Links in the profile. That's who I'm talking to. That's what this screen is here. You get a much better perspective on YouTube. Okay. Is it bottoming out now? They're now starting to price in perhaps 1%. We've already priced in 0.75. Now we'll be pricing in. Are we now pricing in a 1%? 502, 503 on Virgin Galactic. 75 basis points announced. It can't be announced. It hasn't spoken yet. That's not confirmed. The S&P down nearly 3.5% now. 75 basis points cannot be announced. Jerome Powell hasn't spoken yet. Jerome Powell hasn't spoken. No one knows. It's in the minutes. I very much doubt that. I very much doubt that information is out there. Anyway. The overall markets are reacting. Millions will be liquidated. You're absolutely right. Jerome Powell, this is where we'll have it. As soon as he speaks, we will have it for you live, okay? Right now, we are waiting. and you'll be here live for it. If you've just come on in now, please subscribe and ring the bell. We have wonderful membership programs here to support everybody. If you want to be a member or subscribe to the channel, we're here 10 hours a day, every day, real trades, real positions, here to support everyone. Okay, here we go. Got to keep our eye on everything today. Be very, 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 very wary. This could drop even quicker than it looks. Looks bad now, but it's nothing. It really hasn't started yet. We've had months of it going down, but it could go a lot further than this. The announcement comes out before the remarks. So it's 0.75. Is that what we've confirmed? Yeah, 0.75 everywhere reporting it. Okay. 0.75, but remember, it's not about the 0.75. It's a projection going forward. Everybody, 0.75. Well, that is great. The markets now can rally from here, but what we have to do is bear in mind, it's where the markets, what the forecast is. Everyone's getting a bit excited saying it's 0.75. So we've got Jerome Powell waiting to speak. You will not miss everything. It's all happening here. Just be understood, though, that 0.75 is great. It's priced in, and now we're going to get a bounce from here, I'm sure. But it's where the forecast goes. It's what they plan to do next. This was priced in, and we're happy for this. If it had been a 1% today, we'd have been in all kinds of trouble. So 0.75 is great. Now it's time for me to buy some more space. So let me look at the overall portfolio. We're down 1.77. We're rallying now. Here comes the first rally. Buy space. $506, $505. There we go. I bought another 100 space. My average now is at 541. This is good. We can get a rally from here. But I will be trimming off 541. Let's go back to VU. Here it comes. Here comes the first bounce. But be wary. Be careful. Got Jerome. If you've just tuned in, we have got Jerome Powell live on the show this afternoon. You're not going to miss anything. The good news, 0.75. Ali Tisro, 0.75. We've got 0.75. Dovish remarks and market will rally. That's right. But we're already priced in, so this is good. Things are moving slowly in the right direction. So now you can be a bit more confident with buying these dips. It's all getting dumped on Friday. Well, that's why you need to buy the app, get the dips, get the bottoms, and trade off the top. That's exactly what you need to do. This is your only chance to do that. What else was said? Ali Tisro, we've not had the meeting yet. It hasn't happened yet. Okay, it hasn't happened yet. Okay, we had a drop when the announcement was made through the minutes. All right, we haven't yet had the meeting. You are in the right place, Ali. See, look, that's what happened when it came out 0.75 and it reacted by dumping as it always does. Everyone knee-jerk reaction, which is ridiculous. You should never have that, but that's what the market does. I bought some more Virgin Galactic. Sell out as soon as possible. 0.75. The meeting will be terrible. This isn't looking good. Clear out space. No, 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 no. Be calm. Be strategic. It will pump now, then dump big. The S&P, the Fed will report soon. This is Jerome Powell. We've got the link ready to go. Hasn't gone live yet. When he does, you'll have it all. Just keep lowering your averages. Keep trimming off the top. Buy crypto. That's the worst advice. The worst advice would be to buy crypto right now. Crypto is proven 100% it is not a hedge against inflation. 100% keeps going down when inflation keeps going up. So it's ridiculous that YouTubers keep saying that. They say it because it's good for their YouTube channels. It's ridiculous. And anyone who believes it needs to sit in the corner with a dunce hat on their head. Stop believing that nonsense. Here we tell the truth, and that's it. And not everyone likes the truth. They want to hear, I'm going to get rich in 5 minutes. Well, that isn't the reality. We're at 75 basis points now. So it's good. It's exactly what we wanted. We can end the poll now because we know. So we'll create a new poll now. Why is everyone so... I don't understand why everyone is so fluffy right now. We got people going, this is, I'm up, I'm down, I'm fully out, sold everything. What is wrong with everybody? Why hasn't anyone got any structure? We planned for 0.75. We wanted everything to be 0.75. You've now got 0.75, and now everyone's going, short everything, get out, run around. It's like talking to a load of lemmings. What's going on? Everyone's running around like a headless chicken. We'll carry on running around like a headless chicken. What is the point of that? What is the point of that? What is wrong with you? I'm not buying or selling. I know, everyone's gone nuts. This is, what the hell? I don't know. I had a plan, what I would do if it went up, if it went down, went sideways, and all I'm doing is acting out my plan. That's it. If you're all going to go mad now and jump off a bridge, I don't understand. True, Martin, be calm. Don't have FOMO. Holding strong. You know what you're going to do? The markets are going to pick back up again. This is all the crazy people running around now going, I don't know what to do. We're all going to jump off a bridge. Buy low. Lower your cost basis. There, Elizabeth Langley. Join us on youtube.com/thedaytrader1. Elizabeth, that's where we are. youtube.com/thedaytrader1. That's where we are right now. Virgin Galactic. VU. Why not play some music and check the markets tomorrow? Theodore Roll. If I get a $10 super chat, we'll play I'm Still Standing by Elton John at the end of the show. I will do that if we get some requests at the end of the trading show. If we get some super chats. For those of you who don't know, I'm known as the World Piano Man. There's my TV studio behind me. I'll go back there and I will do I'm Still Standing by Sir Elton John if we get some super chats in the stream to cover the copyright. Okay. My average is now 541. The S&P is going down. I'm buying right now anything under 498 and I'm in. Everyone's reacting badly. I don't know why. Well, I do know why. This is exactly what we talk about. This is not reflected in the charts. You're buying into weakness, are we? Is that right? Well, Warren Buffett doesn't agree with you. You're entitled to your opinion. Play it anywhere you like. Right, Jerome Powell is waiting in the wings. Here we go. This is what we'll be going to very, very shortly. Not yet. I will bring it to you as soon as it's available. He'll be talking live. We'll have him live on the show. Everybody will watch it with us. And you'll hear it all live here on the show. Here is our first super chat. This is bad. Sellout space is going to $3. Then I'll buy it at $3 then. Thank you, Ali Tisro. We're getting some super chats coming in now. If you put your name on the screen, you'll get a song request later on in the show. Ali Tisro, there you go. Ali Tisro can make a song request. Maybe he'll go for I'm Still Standing, Elton John later on at the end of the show. We'll celebrate. We'll have a beer. One way or another, we'll survive. One way or another, we'll get through it. This is what it's all about. We've got the Fed report around the corner. Got a massive crowd on TikTok. May I just talk to everybody on TikTok? If you are a serious trader, a serious investor, and you want to be part of the main show, you want to see Jerome Powell live on the screen. You want to hear what he says. You want to put messages to him through my Twitter feed. You also want to ask me questions, ask all our members. You can call in. All this great stuff. All of that happens in YouTube. The link's in the profile right here. Just click that, come into YouTube and say, I'm from TikTok and I would like to be in your free prize cash draw. And you can. Everyone can be in my free prize cash draw. It's completely free. I don't sell you anything. I don't contact you or do anything whatsoever. But all you got to do is watch one of my videos and you'll be in our draw. We do it every single Friday. But Jerome Powell will be live on the show in just a few minutes' time. If you want to be in, you need to come into this profile here. All right. And the link's in the chat. Links in the chat here to YouTube. All right. Okay. Are you in Martyn Ali Tisro? You know we have that conversation privately between the two of us. Message me on Discord. We have that private conversation about that. Please do message me. Extremely hawkish, planned accordingly. Where's clockwork? Virgin Galactic's now 502. What did I just buy? 506. Getting ready to scalp trade Virgin Galactic again. Let's go back to the overall portfolio, down 2%. Time to scalp today after he starts talking rubbish. Says, starts talking rubbish. I like it. S&P's going down. If you've just tuned in right now, we need some energy in the show. Ali, I agree. Space is going to $3. No one knows that. No one knows that for sure. No one knows that for sure. If you are now watching me on YouTube, we've got a great audience. I want everyone now we're getting ready for Jerome Powell. He's not speaking yet. We'll bring it to you live very, very shortly. But what I would like to do, though, is look into my crystal ball. There we go for all our guests around the world. Smash the like button if you want the shares to go up this afternoon. If you want everyone to make some money, smash the like button and come into the live chat and tell us what country you're from so we can celebrate and welcome you in. Everyone smash the like. I want to get 60 likes in the next 60 seconds. You ready? That's 1 like a second. Are you ready? I want 60 likes in 1 minute. Here we go. Let's get some energy, people. Stop being fearful. Here we go. Smash the like button. Here it comes. We need 60 likes in 60 seconds. That's 1 a second. Are you ready? We're up to 47 already. Keep on going. Let's get ready to rumble. Virgin Orbit. Virgin Galactic. Another 20% and you'll be liquidated, Robert Rose. Smash the like. We're down to 50 likes. We need 10 more likes and we'll be there. Kumar from India, welcome. I'll put your name on the screen if you smash the like button. There's Kumar. There he is. Welcome him. We need 5 more likes in 15 seconds. Stephen Rowe, 480 is a good benchmark. I'm in at 475. There we go. There are not even that many watching. Yes, there are. There are 74 watching right now. So you're completely wrong. Can non-members please... Oh, hang on a minute. We've changed screens, haven't we? That's why that's there. Done. Thank you very much, Vineet. Appreciate it. Got a lot of guests from India today. We always get a lot of guests from India on these events. Always nice to have you here. Thanks for smashing the like button. We're just waiting for Jerome Powell to speak. You will have it live. You won't miss a thing. We're here to help and support people. Okay, we're at 503, trying to come back up again. The overall portfolio now is down 1.91, 1.78. Make me a moderator, please. The trolls are here. The Church of Logic. I thought you already were, Church. We've got comments coming in here now from Ali Tisro. We can focus the super chats. Fourth super chat. This will be a bad meeting. They will say that 1% is still on the cards. Sell out, get short. No, no, no. Ali Tisro, we don't short the stocks. Well, I mean, you do. I don't. It's not really for me. From Cameroon. Come on into YouTube. At youtube.com/The Day Trader 1. We had 59 likes. We were 1 short. We didn't quite make it. Worth looking at the link I just sent, Martin. Easy C. I will try to get there if I can during the show. Right, we've started to go sideways now. Let me share you the... Over 200 on TikTok. Big crowd. Over on TikTok, welcome. we've got our cash giveaway every single Friday. So if you want to be in our cash prize giveaway, it's a free to enter free draw. Just click the profile right here, come into YouTube and say, I'm from TikTok and I want to be in your free cash prize draw. We do it on this show every Friday. We're live every single day, 5 days a week, up to 10 hours a day. We're here to help people. I'm here to support people. We do charity fundraisers. We give cash prizes away all the time. I sell you nothing, want nothing from you. Just join me on YouTube. The link's in the profile here. And I give away the money I make on the Friday in my live show. So if you want to be part of it, click the profile right here. And we might even have some memberships to give away on YouTube. Shall we say that? Shall we say that? Does anybody fancy doing that today? If you come into YouTube, it's not a promise, but we might have some free memberships to give away as well as a cash prize. Links in the profile. Just say I'm from TikTok. I'm from TikTok. There we go. I want to be in the cash prize, says Fairly Made Gaming. All right. I will give you the link. You can be in our free prize draw. Okay, fantastic. The portfolio is starting to come up. So what you do every single Sunday at 8 a.m. Central, 9 a.m. Eastern, and 2 p.m. GMT, we send out our newsletter. We send it out every single week. And in there is a video. One of my videos, it's either a 1 or 2 minute video, very short video. And all you do is watch it and leave a comment. Leave a comment. And it tells you what to do, what video in the newsletter. We send it out every single Sunday, 8 a.m. Central, 9 a.m. Eastern, 2 p.m. GMT. We're waiting for Jerome Powell to speak. That's coming up very shortly. So anybody who wants to be in our free prize draw, we do it every single Friday. Every single Friday. Here is the email newsletter to sign up. You can unsubscribe at any point. It's a full secure portfolio email. I never use your emails. I don't ask for any information. There is the email. All right. There is the email weekly newsletter. If you click on that, it will bring you to this page here. This is what you will see. You put your email in. That's all you do. And then once you put your email in, you will receive a verification email. The verification email is so you can unsubscribe, all right, if you wish to do so. But we do the free draw every single Friday, okay? So why would you not? Then what you do is you look in your junk folder, because the email will always go into your junk folder because it contains the word cash prize draw. See it there, look? The newsletter is the day trader at martynlucas.com. Can you see it there, look? You search for that, then you verify it. If you just put your email in and think you're done, you're not. You have to verify your email. That way it's a secure server. That way you can unsubscribe, okay? All right, and that's the email you're looking for, the day trader at martynlucas.com. And that's it. You'll be in my free draw every single Friday. We do it every Friday on the opening bell of this channel, okay? All right. Let's get ready to go. Look at the subscribers flying up. When we get to 5,000, we are having Greg Dickerson on our channel. There is the FOMC live. We are going to go live as soon as Jerome Powell speaks. The portfolio now is starting to climb again. Signed up to the email. Make sure that you verified it though. If you didn't verify the email, did you get a verification email and click on it? Ali Tisro, no super chats like that, please. What was that? What was that? I didn't see that. What was that? Wasn't this supposed to be members only show? It was supposed to be a members only chat. You're absolutely right. I forgot to press the button. Queen, I forgot to press the button. Anyway, yeah. It was open to be viewed, but it was only going to be members to watch and members to chat. And unfortunately, I forgot to press the button before I went live. So anyway, congrats, you've successfully subscribed. Yes, and then you get a verification email. You've got to click on that. Did you get the verification email? Wait, don't do that. What's coming up now? The committee seek to achieve maximum employment and inflation. Ali Tisro, we will get through this. Make sure you buy the dip. There we go, Ali Tisro. Ali Tisro, we will get through this. Make sure to buy the dip. There is your top tip from Ali Tisro on the screen. Thank you, Ali Tisro. Has given you a top tip there this afternoon. And the confirmation email. Fantastic. You are in the draw then. Virgin Galactic is going back up again. I'm about to scalp it again. Fantastic. Perfect. Here we go. I bought it at 506. Okay, here we go. Sell. Right, sell. Here we go. Ali Tisro's giving you there. Sell. And a trailing stop order. Percentage. Amount. 3 cents. Here we go. This is how we're making money this afternoon. 3 cents. 100 shares. And I just bought it at 506. There we go. 509. There we go. Sell space. Trading order amount. 3 cents. 100. And review the order. Or I could. There we go. Review the order. 505. What did I buy it at? 506. 505. 505. I could just actually sell it at this and not even go for a trailing order. We're still a bit too early. I could just sell it for that anyway. 505. Let me think. Should I just do it for 508 and just take it as it is? No. I'm on the fence. Space will be like a rival. No, it won't. No, it won't. Trading stop order 504. I bought it for 506. I could just sell it for that. Lower my average or set a stop trail loss. Let me think what to do. What's the overall portfolio doing now? We're coming back up again. The overall portfolio is down 1% right now. That's good. The market is okay at the moment. 506. We're waiting for Jerome Powell to speak. He's not going to speak yet. We've got a little while to go. Stick with us and you'll be there with us. If you've just tuned in, subscribe and ring the bell. We're scalp trading at the same time. Victim of inflation and hype. Let's go and check something. If you've just tuned in now, subscribe and ring the bell. If you want the stocks to go up, smash the like button. Let's make some money today. When does Powell speak? Powell speaks in just literally a minute over half an hour. The meeting will start and you will have all of it live here. I've got it all primed, ready to go. You won't miss anything. You'll get it all live. This is it, waiting here. I've got the feed live, ready to go. I think what I'm going to do is the purpose of right now is to lower my average. So I'm going to edit that down, go back to a market order, and just do it manually. Just do it manually for now. So sell 100. We'll do it. He will talk about future rates plans, OFC. It will affect. Will the speech at 7:30 affect prices, or are we already priced in? It depends on what he says. It depends on what he says. To be perfectly frank with you, if you want to be a moderator, please message Martyn on Discord. Who wants to be a moderator? $506, back to the main portfolio. Everybody on TikTok, thank you for the follows. If you want to be in our free prize draw, we've already given out some opportunities for our TikTok guests. Just come into the YouTube link just here and come on in. Need space. Space needs a saving grace like Wall Street to stop it from becoming a sub-dollar stock. You don't understand what the stock is if you think if it's not worth anything. This is the price, not the value. My hands are on the swap button. The swap button? This is a multicolored swap shop from the 80s. Remember that? 503, 504. Please, let's go live. We are live. We are live. You're not going to miss anything. Jerome Powell hasn't spoken yet. When he speaks, I will be there. You can't miss anything. I'm bringing you everything live as it happens. This is live, 100% live. Okay. The S&P just going sideways. He's talking. No, he's not. Oh, hang on a minute. Hang on, he's gone early. That wasn't supposed to happen. I apologize.
Stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline...
Bear with me. It's their feed, not mine. It's their feed, not mine. Just stick with me. Let's refresh the screen. I apologize. It'll come back. We haven't lost signal. It's their feed.
And in 2024 and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain
Virgin
well
Galactic is pumping,
as
and I'm
reflected
stop
in
trail
a broad
lossing
range
all the way up.
surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people.
We are live. Everything's working
My colleagues
perfectly.
and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace
Virgin
of those
Galactic
increases
now
will
up
continue to depend on the
516.
incoming
I've
data
got a stop trail
and
loss all the way
evolving
up.
outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases
Yes.
while we assess how our cumulative policy adjustments are affecting the economy and inflation.
Here it comes.
We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Please smash the like button. Virgin Galactic's now 516. I'm trailing it up. Perfect.
Hi, Chair Powell. Thank you for taking our
Making
question.
money, whatever
James
happens
Malik
now.
from the New
Please
York
smash the
Times.
like button.
I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular: to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve. Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy.
What Ali is talking about, click the live button at the bottom of the screen. Make sure it's red, not grey. Make sure you are live and up to date.
Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are
I am live on this video, and you'll be live if you press live under my video.
Your second question, sorry, was?
Is there a point in time that you can see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry. I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up?
We will come down and break this all down at the end. We'll discuss it all and explain it all for you.
It's very hard to say with precise certainty.
I'm up 2% now. It's rallying great.
As I mentioned,
my strategy was perfect.
What we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to.
We are all watching it live.
There is a possibility, certainly, that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly, today we've just moved, I think, probably into the very lowest level of what might be restrictive, and certainly in my view and in the view of the committee, there's a ways to go.
I'm up to 521 on SPCE. I'm up 3.5%. Fantastic. And we're trimming off the top right now.
Projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it.
Tesla 312.
That to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect.
The markets are going up great.
Because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. As I've said, there's no basis for complacency.
I hope everybody followed my lead this morning, bought the dips on the S&P.
That should make it easier to restore price stability. And I guess the third thing I would point to
what's regarded as
that's
high
different this
risk,
time
Virgin
is that
Galactic.
part of this inflation is
you're now
caused
being
by
set
this series
for the
of
next
supply
5
shocks
years
that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say how much these factors
Tesla, 313.
will turn out to really matter in this
Nearly
in this sequence of
$1,000
events,
old money
it
now.
remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, a rate
Church, this
increase
does
in
mean everything.
unemployment
If you trim
and
off
a
the
soft
top,
landing
take
would be
profits,
very challenging.
you've got much better
And
positions
we
now.
don't know. No
It
one
means
knows
everything.
whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Just to follow up on one small thing, are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick?
Nick Timmeros of the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know. You look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting, and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation expectations. I think you would see, at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases, but there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly, and that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here. Given there's some discussion now of overdoing it, what's the incentive to continue front-loading right now Is it lack of progress on inflation seen in the CPI reports? Or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I mean, I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Come on into YouTube quick.
Just
We're
as a
giving
quick
away
follow-up,
5
if the
memberships.
concern is that underlying
5
inflation
memberships.
is becoming more
Look at that,
intense,
everybody.
perhaps each month, then why forego
Incredible.
the more aggressive 100 basis point increase today? And does that risk having to do more later on?
There you go.
Yeah,
we just
so
gave away
we,
5
as
memberships.
we-
you
as
should
we
be
said,
on
you know,
YouTube.
at
Click
the
the
last
profile.
press
We're giving
conference
away
and in
money all the
between
time here.
That one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. So that's how we think about it.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Neil.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment and price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about, the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times, but really we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future, and indeed, Treasury rates moved up, so we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient, and does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong, but there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest-sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, so there's a good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to a significant downturn. But of course, we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Mike, thank you.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward-looking and the lags in your policy are forward-looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth, and we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. That's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this. Inflation, what we hear from people when we meet with them is that they really are suffering from inflation. And if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
Thanks. Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability, and you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So, I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control, and that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11.
We've now gone to members-only chat in the live stream.
Expansions.
For our
and
members only.
You can see what we saw in 2018,
and we'd like to do something special for our members.
20, which
we
was
might have a live
very low
song,
unemployment,
I'm Still Standing, or a good song at the end of the show. You can request it. Members now only can chat, request some music at the end
started keeping track
if
of
you
that.
want to
So
party.
We want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises, and so we want to avoid that. We want to act aggressively now, and get this job done and keep at it until it's done.
Nicole from CNN.
Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset, and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country, where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market. As you know, it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Shelter made up such a large part of this hot CPI report that we saw. Do you
We'll
think
answer
that
all these
there is a lag
questions
and that
at
we
the
will
end,
see that
coming
come
up very
down in
soon.
the coming months, or do you think that there's still this imbalance that needs to be addressed?
I think that shelter shelter inflation is going to remain high for some time. You know, we're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think you know, hope for the best, plan for the worst. So I think on shelter inflation, you just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question.
Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, you know, when we get to, let's assume we do get to that level, which I think is likely, you know, what you're going to do is you're going to adjust that for some forward looking measure of inflation. And, you know, that could be, you pick your measure. It could be, you know, there are all kinds of different things you can pick and you get. But what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, you know, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
That was Fed Chair Jay Powell.
Come back to the main trading show again now. There's the reaction. Fantastic. Good stuff. Right. There we go. We can now discuss the markets and see where everybody's at and see how we get through this. It is now a members-only conversation. If you want to be a member, you can. Just become a member and you can be part of today's show. People taking profits now. I've been doing it. I've been trimming back, but don't over-trim because I could see SPY dropping another 30 to 40%, says Market Profit. Okay. Well, depends where you are, what your entry point was when you came in. This is my overall position right now. Let me share with you. Let me show you the overall position. See all my stocks. We'll go through it. We'll answer everyone's questions. Is that better? There we go. Lost sound. Apologize. We're all good again now. Can't hear you. I'm back now. Sorry about that. Sorry about that. We're all good. So there we go. There's our position. No sound. Sound's gone. It's funny. I get the message from 1,000 people. In 10 seconds, it's like there. Boom. Virgin Galactic. I scalp. Don't scalp too aggressively. You want to enjoy the pump. Now the meeting's over, we might get a little bit. You do want to trim off though. Friday will come and we'll lose some. If you're over balanced on a stock like I am on Virgin Galactic, 2,300. I've got 900 shares. 900 shares I want to trim off, and my average is now 541. If we can get to 540, 550 now, I will start taking money out and putting money on the side, and I'll be very, very happy with that if that happens. Anyway, Virgin Orbit's fallen back. Tesla is now 311. I got day trade warning. Don't worry about the day trade warning. That means you're a pattern day trader. Don't worry about that. I get it all the time. It's just there to protect you, let you know that you're trading a lot. Doesn't mean anything. You can trade 1 million times a day. It just tells you that you're now marked as a pattern day trader. Doesn't mean anything. It's not a bad thing. It's not nothing bad at all. So don't be concerned with that. All right. Have we got any questions at all from anybody? I want to thank Church of Logic. Would everybody please thank Church of Logic? If you won a free membership today, you're able to chat in this. And please thank Church of Logic. He did that because he said to me the other day, if I give you $50, will you buy some Ford? And I said yes. And I said, well, rather than give me $50, give it to the members. So he gave me $50 and as membership, so all of you guys benefited. I still get the $50, less of course the commission from YouTube, but you all get memberships. Please do make the most of that. If you are now a member, you can now be on Discord and get all the perks and the benefit of Discord. You can see all my top tips. You can call into the show. You can get polls in the show. You get comments in the show. You can really take part in it. There's many, many perks, plus your birthdays, plus your fundraisers and all the rest of it. Many, many things you can get. The cash giveaways, all the rest of it. So make sure that you keep up with your memberships. This is Discord. If you got a membership today and you're a member, you can now have upgraded access on Discord. So here is Discord. If you subscribe to Discord right now, there it is. You've got all our top tips. You can talk 24 hours a day to all our team and see all what's going on. Come into Discord. Tell me your username here in YouTube chat, and I will upgrade your account. I do it manually because people will pretend to be you in Discord. So I do it manually here for you. So if you're now a YouTube member, go into Discord, and when you come into YouTube now and tell me what your Discord username is, and I will manually upgrade you. Well done, not yet. Well done, not yet. Welcome, welcome, says Jason. Nice church. Will SPY close green or red at the end of the week? That depends on your position. My overall position on SPY is VU. It's the same thing. I prefer VU because it's cheaper. And I don't mean the stock. Its price is cheaper. It's the same. It's a different price because it was set up at different times. But it's all about the percentages. But the actual expense ratio on VU is better than SPY. SPY is designed for you to be actively trading all the time, in and out of SPY. I buy VU to hold it. So I buy it. I might trim off the top, but I don't in and out of VU. That makes no sense for me at all. I don't think that's how you're supposed to use. That's not how you're supposed to use VU, the S&P 500. You buy it and hold it. Can they still chat here? Who is that? Stephen Rowe. Who can still chat here? It's members only. Members can chat here. Yes, the people that won the memberships can chat here. Absolutely right. Virgin Galactic just fallen back a little bit, up nearly 2%, 1.5%. Members can, Stephen. New members. Yeah, of course. Yep, new members. Absolutely right. Absolutely right. Virgin Orbit. Looking good. So what does everyone think of the meeting? Let me do a poll. Again, you can have your own poll if you want, if you're a member. Hang on, let me end that one. That was a mistake. Do that again. Create a poll. Are you happy with the result? Okay, are you happy? If we'd have got a 1% basis point, I said we'd get 0.75 and I was right. Oh, I was right again. Can you believe it? Are you happy with the result? Yes or no? There you go. I can't see how you cannot be, but maybe you wanted a 1%. I don't know. Are you happy with the result? Yes or no? At 1:40, I'll come on live and talk about it. Hey! One of our members wants to call in. You can call into the broadcast lounge. Let me open it up. There you go. Church is going to call in. Right. We can end this stream right now. We have the closing bell, the regular show waiting in the wings to start our regular closing bell. All right, so we're going to end this stream in a minute, and we're going to go on to the closing bell event itself. If you stick right where you are, this stream will go right to it. If you are obviously watching me on YouTube right now, this is what you're looking for. It'll come up right in a couple of minutes' time, and we'll go straight to the closing bell. See you on the other side. Right, this is the closing bell right here. In our upcoming live streams, you see, it's the next video. All right, we're live right now, and we're going to go to here. And then you can all call in. You can express your thoughts on today's events. Are you happy? Are you not? I mean, at the end of the day, I'm up. I've made profits. I've trimmed off the top. We're getting a bit of a drop-off again. That's part of the course. Nothing straight line. Virgin Galactic, I trimmed down. I made several minor gains. I'm glad at the 0.75. Happy with that. I haven't trimmed off enough yet. It needs to go to 530, 540 before I start really trimming down. And so I haven't done that yet. I've got a very low average now, 541. So we'll end the stream, and I'll see you back in just a couple of minutes. We won't. In fact, we will run the credits because I want to respect everybody that gave a membership, became a member, and so on and so forth. So here is the credits. Someone say roll the credits, and I'll do it. And then I'll be right back in literally 2 minutes for the closing bell. All right, so let's do it right now. Let's bring up the music. Here we go. Let's do the credits. Let's have a look. And we'll end this show. Roll 'em, Jason. Spot on. Moderators. Nobody moderated today. That was good. Ali Tisro, Robert Rose, Super Chats. Thank you so much indeed for taking part today. Subscriptions. Alex N, Crypto FPL, Dunk Dunkers, D-Train, Always Killing, and Ian Jackson. New members. Simon Jones, Theodore Roll, Drilling Demarge, Carlos Sanchez, Neil Carver. Wonderful. Very, very high action today in the show. We love all that. So there you go. You're named on the screen if you gave me a tip, or if you became a member, or you became a subscriber, and what have you. Very, very good indeed. All right, so we're going to take a very, very quick break, and we'll be back in just a couple of minutes. We're just a handful of subscribers away from 5,000 subscribers. Very, very exciting times indeed. That's it from me. I'll see you back for the closing bell in literally 2 minutes, as fast as it takes me to end the stream and start the new one. I'll be right back. That was the Fed report. As far as I'm concerned, it went pretty well. 70% are happy. End of the day, that's really all you could get from it. There we go. 70% are happy. You should be. Really, this is all you could have expected. It's the best you could have expected, to be honest. All right, see you back in just 2 minutes' time. Thanks for being here, and I'll be right back in just 2 minutes. Grab a cup of tea. Let's do the closing bell. We might even do a bit of music. Who knows? See you back in 2 minutes. Take care of yourselves and each other.